How to trade the golden cross and the death cross. Well, the idea behind these patterns is really quite straightforward. If you know how to trade using the MACD, you'll easily understand how to trade these crossover signals. Now, when we're talking about the conventional golden cross and death cross, we are usually looking at the daily chart. So a simple strategy could be to buy at a golden cross and sell at a death cross. In fact, this would have been a relatively successful strategy for trading Bitcoin in the last few years, though there were many false signals along the way. As such, blindly following one signal is typically not the best strategy, so you might want to consider other factors when it comes to market analysis techniques. The crossover strategy we spoke about in the previous lesson is based on daily moving averages. But what about other time periods, you might be thinking? Well, golden crosses and death crosses happen just the same, and traders can take advantage of them. However, as with most chart analysis techniques, signals on higher time frames are always stronger than signals on lower time frames. A golden cross may be happening on the weekly time frame while you're looking at a death cross happening on the hourly time frame. This is why it's always helpful to zoom out and look at the bigger picture on a chart, taking multiple readings into account. Something many traders will also look for when trading golden crosses and death crosses is the trading volume. Now, as with other chart patterns, the volume can be a strong tool for confirmation. As such, when a volume spike accompanies a crossover signal, many traders will be much more confident that the signal is valid. Now, once a golden cross happens, the long-term moving average may be considered as a potential area of support. Conversely, once a death cross happens, it may be considered a potential resistance area. Now, crossover signals may also be cross-checked with signals from other indicators to look for confluence. Confluence traders combine multiple signals and indicators into one strategy in an attempt to make the trade signals that much more reliable. Now, we've discussed some of the most popular crossover signals, the golden and the death cross. In short, a golden cross involves a short-term MA crossing above a long-term MA, and conversely, a death cross involves a short-term MA crossing below a long-term MA. They both can be used as reliable tools for confirming long-term trend reversals when it comes to crypto, the stock market, and Forex.